Hi guys, how's it going? Just want to make a quick video on how to trade index funds. Firstly, what is an index fund? Index fund is for any market. I'm speaking specifically for the Indian market. Is basically the measure of the major stock index of the country, as the name suggests, index fund. So for India, it is the Nifty 50. Of course, there are other index funds such as the Bank Nifty or the small cap 150 or 250 and the mid cap section as well, but we will just focus on the Nifty 50 for now, especially for those who are starting off their trading or investing. You can use index funds as a tool to trade or to invest. In this video, I will be speaking more about how to use it as a trading initiative because that's what I do. And there are several advantages of dealing with an index fund in the first place. You can do the same things with a mutual fund, of course, but generally speaking, mutual funds, even though they might have a higher return, they have higher charges. And for me, it makes sense to go with the index because in one way or the other, especially for a growing country like India, the index will always go up. So tomorrow, even if the Nifty 50 falls 20, 30%, it is only a matter of time that it will come back. For example, in I think March or April, May, the Nifty 50 was down to 8,000, I think, if I'm not mistaken, 7,500 levels. The expectation was it will go down to 4,000, which it did not. And from 7,500 doubled. So if someone, even me, I should have, could have, if at 8,000 I would have invested just say 1 lakh, for example, in the index fund in May or June, in 6 7 months it is almost double, right? Straight, it's 100% return in 8 months time, 9 months time. So that's the beauty of investing in the index fund, that the market will always go up. It's like a rule of thumb. Even if it crashes, even if it goes down 50%, eventually it will go up. Now, that takes a month or 1 year or 10 years. That depends on the country. For a growing country like India, I think the market is just, I mean, we're just starting off in terms of the stock market growing in India. I mean, so Nifty 50 will continue to grow. And so I encourage you to participate in this rally either through an SIP, systematic investment plan, and then you can be an investor, or you could trade as based on your preference. And as I have said in my performance video 2 videos ago or 3 videos ago, it all comes down to your personality, that what is your personality, how much you can take volatility, how patient you are. Based on that, choose whether you want to trade or you want to invest. So with that, I will just tell you how I do it. So this is on, I'm on my screen. So you go to the trading section. So as you can see, I have some other index funds as well, but let's not focus on that now. Let's just focus on, I use UTI. There are others, there's ICICI, there are quite a few. You can choose the one as per you prefer. I like UTI index fund. It's very inexpensive and the service is good as well. So yeah, that's what I like. So what is the index fund? Quite simply, so right now it says 78,000 is my amount, my purchase value. This is the current value and I'm down 0.18%. This is not updated today on the second. This is as of yesterday. Yesterday the index was 14,900 minus 1%, so say 14,800. So in simple words, I right now own the Nifty at 14,800 levels. Very simple. My target is 15,400, 15,500, which I have said in the other videos. At that level, I can choose to sell this. I can sell it partially or completely. That is up to me. Now, for example, at 14,900, I wish to purchase more units. I just go to here, purchase. I can choose whatever amount I would like. And of course, I have to make sure that there are enough funds in my account for this. In this, it is extremely important to note the cutoff timings. Now, this is a mistake which I have made, and please do not make the same mistake. The cutoff time for mutual funds in India is 1:30 p.m., 1:30 in the afternoon, India time. Okay, so I'm going to repeat how to do this. And because even I have made this mistake and I have suffered because of that. So the cutoff time in India is 1:30 p.m. If you, so today, if I want today's unit, so if I want to buy the Nifty at 14,919. Yes, I should have purchased before 1:30 p.m. India time. Okay, so yes, at 1:30 p.m. the market closes at 3:30. You don't know what will happen, but that is the whole point. So at 1 o'clock, let's say India time, the market was just 1% up, and you're like, okay, let me buy it, and then it falls in the last 1 hour. It is how it is. There is no way of controlling that. If right now it is post 1:30 p.m. in India, if right now I buy anything, I will be buying the units as of tomorrow evening, meaning tomorrow 1:30 p.m. or tomorrow end of the day, whatever the units, that will be in my account. So if I, let's say, buy 10,000 rupees worth of the index fund now, tomorrow if the market is at plus 1%, so I will buy the index at 15,000. If it goes down 1%, I will buy it at 14,800. I hope it's clear. And of course, if I'm not clear, I'm sorry. Please just ask me in the comments. I will try to explain myself better. So the key in this is it's a little bit of speculation, and you can only do it in the early hours of the day, Indian time. If you see at 11 o'clock, 12 o'clock, the market is 2% down, and you think, okay, that's a good buying opportunity, you can buy a certain amount of units. If you think, no, market is 2% down, but tomorrow it will be, I want to see how the market ends, and maybe tomorrow it will be lower, then you can wait after 1:30 and you can buy accordingly. So this 1:30 p.m. India time is extremely important to decide which NAV you will get. So there is always a little bit of speculation, and that comes down to your judgment, that comes down to luck, that comes down to how you perceive the market to be. So that is how it is. If there is any other question on this, please let me know in the comment section. It is fairly easy. I recommend trading the Nifty fund, especially because even in stocks there is always a risk. Even if you go, if you're a beginner especially, even if you choose Reliance or you choose Asian Paints, Maruti, I'm talking of like real blue chip names, there is every probability that those stocks might go down and stay down for a while because you don't know when they will recover. Whereas the Nifty, even if it goes down, A, it will always recover. B, if there is a not good stock in the Nifty 50 will throw out that stock and replace it. So I mean, it basically Nifty 50 is nothing but selling the country's index to the world. So they will never have a laggard in that. They will always want the best companies to be in their index. And this is not only true for India, this is for any index, any major index in the world. So I hope I was able to explain. And if there's any question, please do ask me in the comment section. And believe me, I really recommend you to have an index fund, be it for investment, be it for trading, as you prefer. And believe me, this is the probably the safest way to enter or to invest or to trade in the stock market. Any stock will always have the risk, but the index will be, everything in stock has risks, but the index has the lowest risk. So yeah, that's it for now, guys. Have a good one, and thank you.